Welcome back, traders and investors. We have a veteran investor and trader on the line, Vlad Karpel, founder of Tradespoon. Vlad, how you doing today?
Good, Joe. How are you?
We're doing good. I guess we're the only people that get excited when the market's going down around here. Boy, you got a big down opening, something that we haven't seen for years here in the S&Ps. We're cascading lower here, down 2175, 2150 at 1945, 75. I guess my first question did you have any short positions on or any downside protection that you might be looking to add to or cover?
Sure. Yeah, we do have, we run our portfolio as a long short portfolio overlaid with equity options. And we have a lot of Russell 2000 short positions where we utilize put spread
Okay.
or we sell in the call spread. Some of these positions are Vistaprint and Shutterfly. These are the small cap companies
Yep.
that are online broker and they are selling a lot of print and selling a lot of online services. And the earnings are down. They have negative earnings consistency over the past 3 quarters. The earnings are decelerating, so they've been up for the past couple of months, but because the market was up, but these were perfect timing going into the earnings season, and we were short these positions by utilizing put spreads or selling call spreads.
Okay, so for you talking about the Shutterfly here, when did you start taking? I mean, it had that huge gap up. I'm not sure what instigated that from 44 to 50. Were you in before that, or did you take advantage on that gap up to start initiating the short position?
We had a small position before that, but once it gave up on the rumors of the possible acquisition,
Uh
we
huh.
kind of we did the repair strategy and we bought another put spread, and now we're actually making money because the Shutterfly has recovered, gap down, and trying to fill that gap back.
I my wife uses that service quite a bit because you can upload the pictures, and now for our vacation, she makes these really instead of like photo albums, she makes these really nice books. So I guess more people need to be using it. So what's your strategy for today? And it's coming in. This is something that you're going to be holding for a long time, or is going to use this drop today as a perhaps to take some profits?
I would using this drop to take some profit. We also go into the earnings season. So right now there's obviously some, low volume, very high volatility. And as the earnings season starts, you will see that volatility up and down. I think the long-term trend, as we said last time when I was on the show, is still intact, and we're moving to the upside. You will have these short corrections because of the volume during the summer is low and because of the high volatility. So overall, we're trying to close all of our positions before the earnings season and roll them.
Okay.
And as earnings occur and we have vision for what which industries and which sectors are going to go up and which sectors or industries are going down, we will reinitiate positions. But our strategies right now is try to be flat before the earnings seasons and only use strategies on the stocks that we have enough information on due to the earnings seasons.
Okay. And so how do you approach these kind of opens? Like I said, we haven't opened down over 20 handles in quite some time here. If you're still sticking with your bullish thesis, are you out here trying to scoop some things up on the open, or do you have certain levels that you're looking for?
We are doing some earnings plays.
Okay.
We have financial sector, WFC and JP Morgan will announce this week and next week, Citigroup. So before the earnings, we have a long-term outlook on some of these stocks, and as implied volatility goes up right before the earnings, we're looking to do some iron condor where we can sell credit call spread and credit put spread one standard deviation away if the implied volatility has increased by, to the 50% IV rank. If you look at the annual IV chart, and that's kind of been a strategy that works well. We do have what Tradespoon does. We do long-term ratings, and then we look at past trading patterns and past earnings announcement patterns, and we try to predict where the stock is going to be in the next 50 days. So as earnings come out, right before them and volatility jumps, we try to kind of, use our long-term bias, whether bullish or short or bearish, to take advantage of these earnings. We try to, because right now we're in the low implied volatility, we keep our trades small, and we try to sell premium, one standard deviation away, and trading small but trading often, kind of our strategy in this low volatility environment.
Okay, and so with the iron condors and selling the credit, the credit call spreads, what you're doing there is, especially with the volatility ramps up, you're kind of getting you're using the money, those proceeds, to pay for other positions, and you're also using the time decay and the decrease of volatility kind of finance your position. You're trying to pick a direction, but with what you're doing, even if you're wrong on the direction, and correct me if I'm wrong, you still may be able to limit your loss by taking in some of the premium when you were selling at higher volatility.
That is absolutely correct. I mean, let's say if we are, on JP Morgan, we're long-term bullish. We try to structure our trade that even if we're long-term bullish and we do the credit spreads with more premium collecting on the puts, and if we are wrong and we get a sign, we don't mind holding the position and then selling calls against that stock.
Okay. Do you do anything in the weekly options?
We usually do, especially for earnings season, as a
Okay.
binary event. If there is a weekly options, that expires this Friday, but the earnings are today and Thursday, then we can utilize that. We try to do options that expire within the next 5 days. So weekly options for earnings season, I think, is the perfect, vehicle to monetize our bias for the earnings seasons.
Okay, so how about some of the momentum stocks here? They had a major rally. Facebook and Twitter, LinkedIn, Netflix made a new all-time high. Those are something that you get a nice bang for the buck. Were you active in any of those stocks? Twitter had a great move from $29.50 up over $40. I believe it got to like $42.94 and right around the $43 area. And then did you notice that they kind of peaked early in the week last week, ahead of the market? The market peaked on Thursday, of course, the July 3rd. Did you notice that divergence at all?
I have noticed that. I think they follow in the Russell 2000, a small cap stock. So you have to watch the Russell 2000. If you like the volatility plays and stocks that move often, I mean, they're perfect for doing this iron counter strategy. But you have to be careful because, when they do correct, they have these violent moves. And I would say you should trade small positions and be able to, if the stock does go against you, you would either do a repair strategy, some kind of roll into the next month, or executing, a put spread if you're short-term bearish. But, I think personally I don't do them, but I think Russell 2000 is in correction mode and we need to take that into account. So I think we're in this earnings season and volume is low, so you will have high volatility. You need to be able to stomach that.
We've talked to some other people too, like Nick Shaheen, who comes on the show, Market Fi Maven, and he likes that Russell too, like looking at those small caps. What's your reason? Why do you think that leads the market a little bit?
Well, I think
Vlad? Hey, Vlad, we lost you there for a second. You still there?
Yes, I am there.
Okay, go ahead.
So Russell 2000 has been leading the stock market for the past year, and we see during on the upside it's leading the market, but on the downside it also, every time there has been a correction, if you look in the S&P 500 chart, every time there has been 2 to 3% correction, Russell 2000 is leading that correction on the downside. So I think they've been most volatile, and if there is a divergence and the market is in correction, then yes, you definitely have a correction in small cap stock. That's why most of our positions where we're short, we're using Russell 2000 components.
Okay, and are you a fan of the VIX at all?
I am a fan of the VIX. I don't trade it personally, but I carefully watch. And as the VIX is been historically low, usually it's a contrarian signal, and it might lead to a correction. So you have to watch the VIX, and as it approaches 20 and 23 level, then you definitely might get a correction in the stock market. So you have to be careful about that. So I
Okay.
think the VIX is a great indicator, contrarian kind of indicator when the market is oversold or when the market is overbought, as it indicates, how much uh, hedging going on in the market. And as VIX is going up, that means a lot of people buying S&P puts and fear is elevated.
Do you I know we've talked to Andrew Keene and some other option traders, and actually Garrett on our desk here picked up a big trade in the 70 puts and lumber liquidators yesterday. Do you have any kind of scanning software, or do you look for like just really huge trades, or huge prints in some of the weekly, or options to perhaps get a key of what some of the bigger players doing? Is that part of your strategy at all?
We do. We at Tradespoon we do have a software that ranks the stocks long term for 1 year based on both fundamental and technical analysis, but it also looks at the implied volatility and option value and predicts where the stock is going to be in the next 50 days. During the options expiration cycle. So we are looking at the increased implied volatility and where it is historically, and we are looking at the unusual option volume activity. And these scanners kind of show us, those best candidates for either going long or short on the stocks that we follow.
Okay, let's shift away from like the options and the technicals and everything, and let's get down to some hardcore fundamentals here. And the fundamentals have been don't fight the Fed. That as long as the Fed is continuing to ease, that the money is going to continue to flow into the market. But now you have a pretty clear statement by the Fed yesterday that that they're going to be winding things down. So if you don't fight the Fed on the upside, is that the true on the downside? Could this finally be the turn in interest rates?
Well, it's definitely watching, something important to watch. And I think, especially in the bond market, I think you will have a reversal. We already had a correction once, and I think, long-term bonds will start selling off, as
Okay.
the tapering is winding down and stopping. In terms of the stock market, I think a lot of it depends on the earnings season and how much, growth in the companies. I think unemployment is steadily going down. Companies are investing in capital infrastructures. We've seen technology stocks and transportation stocks going up. So I think I'll view that in the next 6 months we are going to continue in the bullish stock market. It all depends, on the corporate earnings. And since in terms of money flow, there's nowhere else to invest in the next 6 months. I think by default people will invest in U.S. equities.
Okay, and just one final question here. Dennis likes to talk about, if they're selling stocks, in one area, the momentums they're buying, might be buying stocks in other sectors, and he likes to look at, some of the defensive stocks like the Procter and Gamble's, the Johnson and Johnson's. Johnson and Johnson actually is trading down 76 cents right now. Do you have any strategies that relate to that? As far as different markets, looking for where the money's going to be flowing in and out of?
We do definitely do look at the sectors and sector rotations. I think the discount retail stores like JCPenney and Sears, they have been selling off, and we've been bearish on that sector. Dollar General is another example. In terms of the Procter and Gamble's of the world and consumer staples, they've been in the uptrend, for the past 6 months. So I'm not sure if they're going to be following the trend where the market is selling off. They're going to keep going up. I think they're also going to sell off because they've just been overbought and they are trading in the historical upper range of their multiple of their P multiple.
Okay, so you're sticking to the numbers. Okay, Vlad Karpel.
Sticking to the numbers.
Yep, sticking to the numbers and the strategies that work for you. Vlad Karpel, founder of Tradespoon here, veteran investor here, giving us a very calm and very analytical look at the markets. Thanks a lot, Vlad.
Thank you. Appreciate it.
Have you on again.
Thanks, Joe. Thanks. Take care.
Okay, take care.